Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 6th, 2026, and we're diving into AerSale's recently released fourth quarter and full year 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, welcome to the show.
Thank you for having me. I'm excited to discuss AerSale's performance and what it means for investors.
Revenue and profitability overview. Let's start with the top line. AerSale reported a revenue of $90.9 million for the fourth quarter of 2025, which is a slight decrease from the previous year. However, their adjusted net income and EBITDA have shown significant improvements. John, can you elaborate on these figures?
Absolutely. While the revenue saw a 4% decline, primarily due to the timing of flight equipment sales, AerSale's adjusted net income increased by 57.7% to $7.5 million. This was driven by improved profitability from their maintenance, repair, and overhaul activities, as well as cost-cutting initiatives. Adjusted EBITDA also rose by 17.1% to $15.2 million, indicating strong operational efficiency.
EPS forecast and actual performance. Analysts had forecasted an EPS of 13 cents for AerSale, but the company delivered an adjusted EPS of 16 cents. What does this tell us about AerSale's performance, John?
This is a positive surprise for investors. AerSale exceeded the EPS forecast by 0.03 cents, which reflects their effective cost management and operational efficiencies. The company's focus on high-margin activities and strategic initiatives has clearly paid off, resulting in a stronger bottom line than anticipated.
Operational efficiencies and future outlook. John, AerSale's gross margin improved to 34.1% in the fourth quarter, and their selling, general, and administrative expenses decreased. How did these factors contribute to their overall performance?
The increase in gross margin is a result of higher margins from leasing and MRO activities, which are less volatile than flight equipment sales. The reduction in SG&A expenses by nearly $1 million also highlights AerSale's commitment to cost efficiency. CEO Nick Finazzo emphasized their focus on growing USM, leasing, and MRO activities, which are core to their business model and help mitigate revenue volatility.
Strategic initiatives and market position. Despite a decrease in flight equipment sales, AerSale has seen growth in other areas. Can you tell us more about their strategic initiatives and market position?
Indeed, while flight equipment sales were down, AerSale's revenue from USM and leasing grew by 9.8%. This growth is driven by strong commercial demand and an expanded lease pool. Additionally, their MRO facilities have been focusing on high-margin opportunities, which has improved profitability. AerSale's strategic shift towards more stable revenue streams is positioning them well in the market.
Key takeaways. As we wrap up, John, could you provide a brief summary of AerSale's performance and their investment prospects?
Overall, AerSale has demonstrated strong financial management and strategic focus, despite a slight dip in annual revenue to $335.3 million. Their adjusted EPS for the full year improved significantly to 33 cents, reflecting their operational efficiencies. With $71.6 million in liquidity, AerSale is well-positioned to continue its growth trajectory. Investors should keep an eye on their expanding MRO capabilities and inventory monetization strategies.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on AerSale's performance in the comments below. Until next time.